Hello again. It's now time for a nice question on a working capital calculation. Right, so I'm going to do one of my revision exercises with you. So I'm going to share my screen. Won't take me a second. Almost there. This one. Let's just get it at the start, because obviously that's the best place to be. Right, so what do we need to calculate here? Three things. Firstly, we need to find working capital, part 2, current liabilities, and finally, net working capital as number 3. So the most important thing that I'm sure you know by now in any accounting or finance subject are the dates. So let's see what important dates we've got here. So this information is available as at February 2022. That will have some relevance. Why do I say that? Right, so in order for an asset to be considered current, it needs to be maturing or be available within 12 months of the given date. So that's why it's important that we know it's February 2022. Also, in the case of current liabilities, you do have some liabilities that are generally considered to be non-current, but could, as they get paid off and the term decreases, they will eventually become current. So how do we know if it is current or not? So long as it's going to be paid off or settled within 12 months of the given date. So let's start by doing part 1 and 2 simultaneously. I think that will be the easiest way to do it. So let me just show you the question. We're wanting to do working capital, which I said is current assets. And we also want to do current liabilities for the same period. So I think to be more efficient, I'm just going to go down the list here. And I'm going to indicate whether we're going to consider something or not. And if we are, if it is going to be a current asset or a current liability. So the things we're going to be leaving out in this question is anything non-current. Right, so let me just select something in which to type. Just going to go through them. Creditors control. So that is definitely something which is current. And that is owing by us. So that will be a, just make it a bit bigger, sorry. That will be a current liability. A long-term loan from a bank, nope. That will be non-current. So we will not use that value. Equipment is an asset, but it's a non-current asset. So also not using that. Accumulated depreciation, well, that is a different type of an account altogether. It's neither asset nor liability. So once again, we give that a miss. Trading inventory, here is something. That is a very standard, typical answer, or example, pardon me, of a current asset. Bank could be a tricky one because the bank can either have a positive balance or it can have a negative balance, in which case it's a bank overdraft. So a bank overdraft is a current liability. Then in terms of the credit cards are always considered, irrespective of the amount, to be current liabilities, because the bank can call in your credit card amounts immediately. Right. Then I said there are other current assets and current liabilities besides the main ones. Okay. So accrued expenses are expenses that we should have paid in the current year, but they've become overdue, so they are outstanding. So they represent a current liability. Our income received in advance, that's not really to be recognized in the current period. So it doesn't really belong to us yet, even though we have it. So that is also a current liability. Then coming on to VAT, there are the two kinds of VAT. So input VAT is the VAT that a business pays on purchases of stock. It can claim that back from SARS. So therefore, that is a way in which the business can benefit because it reduces its VAT liability. So input VAT is a current asset. Then we're on to various kinds of money. Petty cash, straightforward, current asset, as is savings account, current asset. Then debtors control, most definitely yes. Also, just remember the other names. For example, accounts receivable, trade debtors, trade receivables. So your debtors control would be current asset. What then about accrued income and your prepaid expenses? All right, these are favorable for the business. So your accrued income is a current asset, whereas your accrued expenses, as we saw earlier, are current liabilities. Then prepaid expenses. This is a benefit to the business, having paid in advance, current asset. So note that prepaid expenses, current asset, whereas income received in advance, current liability. Then our output VAT, this is what we charge customers on sales. And this is what we need as a business to pay into SARS. So this is due by the business, therefore current liability. Then a fixed deposit. The most important thing that we need to have a look at here is the date. So let me highlight that for you. When is it maturing? The 30th of September, 2022. So obviously we can have fixed deposits of varying maturities. Okay, some are quite short term, 3 or 6 months, etc., and some are several years. So what did I say about the criteria for being current? We need to have a look over here. This is the important thing, the date. We are doing our calculation as at February 2022. So in order to be current, the cutoff period would be that the thing needs to mature no later than February 2023. Does it? It matures 30th September 2022, so yes. And then what would that be? That is a current asset. So all I'm now going to do in part 1 and 2 is I'm just going to write it up. And we're going to add it all together. So no changes to what I've done. Everything that we found as current asset, I'm going to write in part 1 and add it all together. Oh, that's very, very dark. We don't like that color. Sorry about that. We'll just have to go with it for the moment, I think. Sorry. No, we can get rid of it. Wasn't happy with that at all. Let's make it something more pleasant. There. So our total assets or our working capital, 202,700. Then we do the same, all those things that I identified as current liabilities. We are going to add all of those together, and that comes to 241,600. Then, final step, the difference between them, net working capital. So we're going to subtract the 241 from the 202, and look at this. We land up with a negative number. Is that a mistake? Definitely not. Let's see why. We have more current liabilities than we have current assets. So therefore, our net working capital will be a negative number. And what does this indicate about the business? Okay. That it does not have sufficient current assets to be able to service all its current liabilities. Okay. It's in a bit of a liquidity predicament. It's risky in terms of ability to continue operations. So there's the risk of the technical insolvency, okay, but not obviously insolvent in the absolute sense. Okay. So there we go. Please do practice this kind of a question. Also, as I mentioned, to have a look at the two questions from the textbook. Just bears repeating again here. That will be the question 3.3 as well as the question 3.8. Quite straightforward, really. The only thing that's going to be of significance, and I'll just type that here for you, from both the current assets and the current liabilities side, NB dates. So dates will be the clue as to whether something is current or not. Right, so we've wrapped up that section. Next up, I'm going to do a nice question where we can have a look at how you're going to work out the profit in conjunction with the bank balance. And we could possibly look to see if we change the creditors settlement term or we change the debtors collection term, how that impacts on the liquidity and the cash flow position of the business. So there we have it. We are finished with this question. Time for me to end recording, and I will be back very soon with another question.